Hi, my name is Halal Okta and this is my investor pitch for Aerocycle. Aerocycle is a high quality bike brand that has bikes which operate in three different segments. We have recreational, mountain, and speed. We're currently based in Amsterdam and we're hoping to expand to New York in Q4. We're facing a lot of strong competition with the market share, but it's generally evenly distributed between our competitors. However, we do want to establish a strong financial and marketing plan, and we believe that it will help us dominate the market in the upcoming quarters. Financially, as of Q3, we have generated a positive cash flow and net income, which will continue to grow sustainably, hopefully. And we're currently asking for a $2.5 million investment with a share price of 100. This will generate for our investor a lucrative ROI of 10%. Financially, Aerocycle has been performing outstandingly well. Our operating profit has increased significantly from $376,000 in Q1 to $70,485 in Q3, putting us in a financially excellent position to continue our strategic expansion. In the market, we have established ourselves successfully among consumers with a strong diversified revenue streams from recreational and mountain and speed. Our market share has slightly decreased and in Q3 compared to Q2. However, with future expansion plans to New York, we will reach an expected 50% market share by Q6. Our customers are keen to purchase our highest quality bikes in all segments with a generated demand of 976 in Q3. With large investments in marketing planned and further expansion into new markets, we anticipate generated demand to increase rapidly. The competition is fierce, with market share distributed fairly even within all biking segments. Aerocycle differentiates itself from the crowd by offering the highest quality bike in each segment, which allows our consumers to have faith in our brand and allows to increase our margins on the bikes. As for our strengths and weaknesses, our strengths include having the highest quality bikes in each segment. We provide our customers with both in-store and online purchasing options with an excellent customer experience. And we have a diversified revenues by operating in all three biking segments. As for our weaknesses, our prices are currently above average in Q3. Going forward, we ensure that we are priced more competitively to increase our market share to two levels of 50% and above. The problems to be dealt with are that we are looking to expand into different markets such as New York and Rio. These expansions are definitely quite costly, therefore it may leave us with a low working capital unless future investments are received. We need to decrease our prices to attract greater demand going forward, which will make it hard to maintain our bike's high level of quality. As for our marketing strategy, in all segments we have top brand judgments, which goes down to our dedication to quality. The Aerocycle also has the highest ad judgments in the market in the mountain and speed segments. However, our recreational segments has lagged behind our competitors, and this is our main area of focus for our marketing, as well as we believe we have a recreational bike that is significantly better than our competitors. For our sales channel strategy, currently our sales are distributed 60% in-store and 40% web sales. Web sales as a percentage of revenue have increased in Q3, and we hope to continue driving web sales for customers as it offers an easier purchasing experience. As for our human resource strategy, our sales force satisfaction is quite high as we offer lucrative salaries to sales employees with full healthcare coverages. We value the happiness of our employees at Aerocycle, and we want to continue creating an excellent workspace culture. Our worker compensation is also great at Aerocycle, and we offer the highest of wages in the market, and we're continuing to attract and retain the best production workers that are possible. As for our manufacturing strategy, At AeroCycle, we strongly believe in the power of economies of scale, and that's why we previously invested heavily in our operating capacity. This will allow us to increase production in the future without having to invest more money into manufacturing. AeroCycle currently has high operating capacity in the market. Our financial strategy is to grow safely, and that has allowed us to already generate positive operating cash flows. We like to make educated investments that are guaranteed to return generous profits. We also understand the importance of maintaining sufficient retained earnings that can be deployed in case of rainy days or any emergencies. This is avoiding the need to access a line of credit or any debt in general. Our financial ask is an investment amount of $2.5 million, a desired stock price of $110, shared price paid by VC $100, and an ROI at quarter 6, which will be 10%. In quarter 3, we started to generate positive cash flow, which we expect to continue to rise going forward. Essentially, this has left us at a healthy cash flow balance. Also, as of quarter 3, we have started generating positive net profits, which we predict will increase to $541,896 by quarter 6. Other than cost of goods sold, our largest expense is advertising. Balance sheet wise, we predict our assets to continue growing as we continue to invest in new markets and stores, as well as when our sales revenue grows. This is the first part of our tactical plan, and this is the second part of it. Our tactical plan summary is basically to expand to New York and decrease prices to reach more customers, increase our marketing to establish stronger brand awareness, continue to grow our positive cash flow, and make sure employees are paid generously to create great levels of employee satisfaction. Thank you so much for listening, and we hope you invest in AeroCycle.